Hey now, I'm back with another trading system review. This time we will be testing the best scalping system period from the moving average channel. In this video, Artie says his strategy will help you make ridiculous profits every single day. And Ben from Maine says this video just literally changed his life. How life-changing is it? And is it even possible to make this system better? Well, I am going to give you those answers. But before I do, just swipe that subscribe button faster than Alex could cut these earphones. I call this system Artie's Scalp, and like most trading systems, it can be applied to Forex, crypto, options, stocks, indices, or any instrument that has significant volume and market participants. This strategy uses 3 free TradingView indicators. As always, links and settings to all indicators are listed in the description. The first indicator is the Relative Strength Index. The rules call for the inputs to be kept at default. I am going to color it in yellow, in addition to removing the upper and lower bands, coloring the middle band in white, and setting it to 50. The RSI is an extremely popular momentum oscillator, and in this system, we are going to use it for entry confirmation. The second free TradingView indicator is the Triple Smooth Moving Average. I am going to set length 1 to 21, length 2 to 50, and length 3 to 300. The 21 SMA will be colored in aqua, the 50 SMA will be orange, and the 200 SMA will be set to white. We are going to use these studies as trend direction confirmation. The final indicator are Williams Fractals, set to default settings, just like in Artie's video. I'm going to change the color of the bullish fractal signal to green and the bearish fractal signal to red. This indicator will provide our entry signals. Like the name says, the Williams Fractal is a Bill Williams indicator that produces a signal after a 5-bar pattern. In the description, there is a link to this great article on currency.com which explains Williams Fractals in great detail. But in summary, at default settings, a fractal is formed after a 5-bar pattern is complete. For a bearish fractal, we are looking for 3 candles that close higher than the previous candle, followed by 2 bearish candles that close below the previous 2. When that happens, the third candle will get a bearish fractal signal, and it is the exact opposite for longs. 3 bearish candles followed by 2 bullish ones will produce a fractal on the third candle. Let's go over entry criteria and review some examples. As always, system rules and details are listed in the description below. This chart is Euro versus the US dollar 5-minute candles. Before I go over the rules, I just want to make a note of something from the moving average video. At the 5-minute and 55-second mark, Artie says that you are going to wait for the candle to close with the fractal before entry, and he would show this candle here with the fractal signal. However, at default settings, the fractal will not appear until the close of the second candle after the signal. For example, this fractal will not appear on the chart until the close of this candle. For this video, I am going to test this system without the benefit of time travel. Let's go over rules and review some examples. The rules to enter a long on Artie's Scalp are: first, we are looking for the 21 SMA in aqua to be over the 50 SMA in orange, while the 50 SMA is over the 200 SMA in white. Second, the price needs to close above all smooth moving averages. Third, the relative strength index must be over the 50 line. Fourth, we are looking for the first Williams Fractal buy signal after the smoothing average lines up in order as per rule number 1. Finally, we are waiting for the close of the 5th candle on the fractal formation. This is our trigger candle. We place our stop at the bottom of the candle where the fractal buy signal appears and target 10 pips. And this one hits our target, winding up with a great risk to reward ratio of 4. If you enjoy this content, make sure to click that like button. We have one more long example. All of our SMAs are in order. Price closes over all of the SMAs. The RSI is over the 50 line. We get our first bullish fractal after the SMAs line up in order. We enter on the close of the 5th candle of the fractal formation. This is our trigger. We place our stop below the candle where the fractal appears and target 10 pips. And this one hits our target with a 1.3 risk to reward ratio. And now we flip to shorts. This is what I will test for shorts. First, we are looking for the 21 SMA in aqua to be under the 50 SMA in orange, while the 50 SMA is under the 200 SMA in white. Second, the price needs to close below all the smooth moving averages. Third, the relative strength index must be under the 50 line. Fourth, we are looking for the Williams Fractal sell signal after the smooth moving averages line up in order as per rule number 1. Finally, we are waiting for the close of the 5th candle candle on the fractal formation. This is our trigger. We place our stop at the top of the candle where the fractal sell signal appears and target 10 pips. And this one hits our target with a risk to reward ratio of 6.25. I'm going to show you one more short example. All the SMAs are lined up in order. Second, price has closed below all of the SMAs. Third, the RSI is under the 50 line. Then we are looking for the first Williams Fractal sell signal after the SMAs fan out. Finally, we are waiting for the close of the 5th candle on the fractal formation. This is our trigger. We place our stop above the candle with the fractal and target 10 pips. And this one hits our target for a 1.85 to 1 risk to reward ratio. I'm going to give you some ideas on how we can make this system better along with a trader's landing score. And now it's time to do what I do. If you enjoy this content, hit that like button. Remember, this is just 100 tests on one instrument. If you are thinking of using this system, please do all the required testing and be sure to let our community know what you discover. This test was done on the euro versus the US dollar 5-minute candles. It took a little longer than 1.5 months to find the 100 setups. We had a winning rate of 36% with a 5.72% total gain on account. Taking into consideration spreads and fees of most larger brokers, this would most likely be below break even. But there are many lessons to be learned based on this system that I will share in a moment. The equity curve on this test looks like a heart rate monitor. The reason you have these large impulsive moves in either direction is because of what the risk to reward winds up being when you mix a dynamic stop loss with a fixed take profit method. Look at this example from the test. We get a stop loss of 0.8 pips with a crazy 12.5 risk to reward. When you have setups of this proportion at different points of the test, you get an equity curve that looks like this. What score would you give this strategy? Let me know in the comments below. I give this system a trader's landing score of 1 because while some people may think this is the best scalping system period, I would respectfully disagree. There are some fatal flaws to the design of this system that I would like to share with you now. Remember, the enemy of great is good. I have 4 ideas on how we can improve this system. Adding the RSI to this system is superfluous because when the price is below the MAs while fanned out, the RSI is almost always under the 50 line. When we build a trading system, we are looking for indicators that help filter out losers or get you into winners. The RSI used this way serves absolutely no purpose. Secondly, I am not a fan of fixed levels based on pips. When someone says they are going to target 10, 20, 100 or whatever amount of pips before they look at a chart, they are not taking into account to any degree whatsoever current market volatility relative to the time frame, nor are they concerned with market structure. I am not saying you cannot be successful doing that, I just do not prefer it. In this video, I utilize the average true range, which is a great indicator to incorporate market volatility into your trading system without using subjectivity. Look at this chart here. By using a stop at 2 times the ATR of the fractal candle, we stay clear of this consolidation that would have realistically stopped us out because of spreads. But what you cannot do under any circumstance is combine a fixed target amount with a dynamic stop loss or vice versa, because your risk to reward ratio will be so erratic over time you will lose your entire account. Look at this chart here where the risk to reward is under 1, and this was very common during the test. And then you get another one where it is a huge risk to reward ratio, but your stop is barely more than the spread. This is a huge red flag for any system. This is how I would use Williams Fractals. After I see a consolidation, I would look for a break. And in this case, there is a breakdown. Then you can see how the bullish fractals on the left are interacting with the bearish fractals on the right. This is an indication of a downward move and where a good trading system could get you in. Check out this playlist for more profitable systems and have a great day because you deserve it.